These companies are household names and happen to be favorites of my next guest. He's Mark Lehman, president of JMP Securities, and his theme is to stick with the winners when it comes to investing. So Mark, thank you so much for joining us. First of all, now you highlight these three huge names in the technology or related arenas. We're talking about Apple, Amazon, Facebook. So what's the common denominator that all of these three stocks have in common?
The common denominator is they're extremely well-run companies. They're gaining market share. Their business is accelerating. And I think the kind of innovation you see at each of these companies are kind of companies you're going to want to own. Clearly through 2015, that's been a good thing, but beyond 2016 and 2017.
All right, so if you bought Apple stock, for instance, right, about a year ago, it was around $115 a share back then. You held on to it until today. It wouldn't have made a huge difference in your portfolio. So where is Apple stock headed, and what do you think is going to be the catalyst or catalysts that will bring it and get it there?
That's a great point. If you owned it a year ago today, you were looking at about an $8 calendar 2015 estimate. And today we're sitting at about over $10 calendar 15 estimate. So earnings are up 25% and the stock's gone sideways. What's happened since 2014 is you've got more ways to win. Obviously, you're hearing a lot from them on Apple Pay. You're hearing about a new Apple TV. You're hearing about some things in automotive and healthcare. You're hearing about different ways to use your iPhone. And I just think there's more ways to win than a year ago. You got good penetration, obviously, with a phone. There's plenty of places for that to go internationally. And again, estimates have gone up and the stock hasn't. I like when that happens, and I think you got a chance to really gain in 2016.
All right, so there's a relative value play perhaps in Apple shares, but it's a little different here with Amazon because this is a stock that's been an absolute beast. Now, after a recent pullback, it's down from its high of around $675 a share. It's around $647 a share right now. So is it a good time to buy Amazon on this small dip? And where is Amazon headed and what gets it there?
So I think Amazon obviously has been an amazing performer for 2015, and buying it near its all-time high is difficult for a lot of investors. I think you're going to find times in the market like we had in August and September when you see these pullbacks, and that's probably where you want to accumulate more shares, but you want to be an owner of Amazon. Clearly, you want to be there because Amazon Web Services is accelerating and gaining tons of market share. Obviously, the core business, which is what people remember with books and grocery and everything else you can get in a day or two with Prime, is a stupendous business. But this Amazon Web Service is really a game changer and changing the face of technology, and you're going to want to be there. And I'll just give you a little sense of the investor base. If you asked a group of investors a year ago what the Prime catalyst was, they just talk about what's going on with the core business, and they start to talk about Amazon Web Services. Now it's about Amazon Web Services, and you're going to see that massive growth there, and they have so much power. It is a juggernaut in the technology world, and that's why you want to own Apple now and going forward.
Well, now it's interesting because the cloud just keeps getting a bigger and bigger piece of everybody, all these large cap technologies that we talk about, large cap tech companies. Let's talk about Facebook here because we're talking about two stocks that are at or near their record highs. Facebook is one of them. Obviously, Amazon's more mature, but Facebook, a huge story over the past couple of years. What's the outlook for Facebook?
So Facebook has been a big winner. They've beaten all the quarters this year. They made huge investments in some of their other businesses. So everybody remembers the core business of Facebook, but they also have Instagram and other ways to win. And what I like most about Facebook, and I've said it before on this show, is the biggest sporting event in the world, everybody knows, is the finals of the World Cup. 1 billion people watch that. Well, guess what? 1 billion people check their Facebook every single day. So for advertisers, they're getting a World Cup finals multiple times a day. And that's a huge, powerful juggernaut for them, for Facebook, that they can monetize. On the advertising side, they obviously are a prime winner for ad dollars going away from traditional media towards Facebook. Instagram had 300 million users a year ago. It's got 400 million users today, so that's grown 35%. There's just many ways to win there in advertising, and I just think the power and the kind of revenues they're going to get for those prime ads going into an election year, it's just a powerful story that you're going to want to own. Do you want to own it all today? Probably not. But if there's a chance to get a pullback like we saw in August, September, you want to accumulate shares because Facebook is gaining that kind of market share that we've talked about.
All right, so Mark, it sounds like when it comes to these mega cap tech leaders so far, Apple, Amazon, and Facebook, the trade right now is to keep building positions even though some of those stocks are near their all-time highs. Mark, thank you so much for joining us. That's Mark Lehman. He's the president of JMP Securities. And thanks for watching. I'm Dominic Chu. Have a great day.
Hey YouTube fans, I'm Landon Downey from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here and click on all the videos around me to see CNBC's original series, Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.